I want to bring in our next guest. That would be Scott Bauer, CEO of Prosper Trading Academy. All right, Scott, I know we're going to do a deep dive on all things commodities, et cetera, but let's talk about equities really quickly. It looks like the bulls will take back over today after some cooling yesterday, which kind of made sense in the light of that warm PPI print. What's your take on equities this week?
Yeah, I mean it's been a week full of surprises, quite frankly. And anyone thinks that just because typically we see that Santa Claus rally, I think you have to take a much deeper dive into it. I'm not sure if we're really going to move much higher from where we are right now. I know we're looking higher this morning. The Nasdaq's looking good off of Broadcom earnings.
Yeah.
But I'm not sure where we go from here into the end of the year because there's just so much push and pull. There's so much, tug, if you will, on both sides of the marketplace. And I think next week is key with the Fed. Yes, they're going to lower 25 basis points, but, Powell over the last several meetings has been pretty dovish. If he just changes that rhetoric whatsoever, I think the market's going to have a tough time going higher from here into the end of the year.
By the way, Scott, I haven't said this before, but I'm sitting here while I was off camera admiring your setup. I love your setup behind you, like 3 monitors there. All right, I digress. Let's talk about some of the other asset classes that you're paying attention to. Dollar looks like it's under a little bit of pressure today, but what are you paying attention to there? It's been stronger recently in general, but what are you paying attention to now?
It has had a nice run to the upside and has moderated quite a bit. And I think that it's a tired trade right now. And again, waiting for Powell and the Fed next week to give some sort of direction. But if you look at other currencies around the world and other central banks that are just cutting after cutting after cutting, that really is helping the dollar.
Okay. And then let's talk about some of the price action in gold. It was choppy earlier, but it looks like it'll be higher for the week. What is your takeaway from, some of the price action that we're seeing when it comes to gold?
Boy, we've seen a lot of volatility. We saw earlier in the week a big, massive move to the upside. Yesterday, gave all of that back a little bit lower this morning. I still think that gold is in this scenario of buy the dip, not sell the rip. So I still want to be long gold on any big pullback. And to me, the pullback off of the highs that we saw a couple days ago, this is a good area for entry until that pattern breaks. I really think that's the thing to do. Unlike what I see in the crude space, where crude is more of a sell the rip, that I think the fundamentals there are just, record production, no demand coming out of China. So I think that's a tough trade right there.
So you said that's a tough trade. That's a good segue into oil. Oil trading, when we look at WTI, is trading a little bit higher this morning, above $70 a barrel. I'm trying to catch one of the monitors up there. Yeah, above $70 a barrel. Brent up higher as well, above $73 a barrel. But let's talk WTI in particular. When you think about some of the price action that we're seeing in oil, is it all about what you mentioned with regard to China, or some of this about, say, Iran, Russia, et cetera? What are you paying attention to when it comes to oil and some of the geopolitical impact, or is this the old supply-demand story?
If you can get through the noise, then yes, it is supply and demand. Unfortunately, the noise does really, play into where crude is trading. So any geopolitical event or any risk of a geopolitical event is going to prop up, crude, whether it's $1 to $5 a barrel. However, when it comes down to the fundamentals, it really is supply and demand. And we have an oversupply and not great demand, especially going into the winter season here. It's going to be a tough trade. So barring any unforeseen or unfortunate geopolitical events here, I think you have to be short crude.
Okay. All right. That's something certainly to pay attention to, those patterns there with regard to crude. But let's flip and talk crypto, and in particular the belle of the ball, that sector, that will be Bitcoin. It is back above 100,000. It had hit that milestone level, then it cooled some, and now it's back above that level. What are you paying attention to in terms of this Bitcoin bull run that we've seen?
I think what's happened over the last week or so, since all the hype and since it hit 100,000 for the first time, I think this is a really good thing, good setup for the bulls. Because if we can get a consolidation, which we've really had over the last 4 or 5 trading days or so, albeit 96 to 102, but that is a consolidation on some fairly decent volume. That's really indicative of a trend continuing. So that's an accepting range, this range we're in right now. And I think this is set up, maybe we don't see a 10, 20, 30% rise from here in the next several weeks or months, but I think this is set up for a move higher.
Okay, good setup for a move higher. We're looking at also Ethereum higher today, but it hasn't had the same story that Bitcoin has had this year. It hasn't, and there was all this talk that it would because you had all the spot ETFs, et cetera, and it's kind of supposed to have a similar trajectory, but that really hasn't been the case. What are you paying attention to overall? Is it really just a Bitcoin story when it comes to crypto?
That is the bulk of the story, but I don't think you can count Ethereum ETH out yet. And the disparity that we've seen between the two, I believe, will narrow. Historically, the ratio of Bitcoin to Ethereum is historically pretty high right now, and I do think it has to come down. So there's some catch up in my book where ETH will move higher in relation to Bitcoin. I think you need to be long on both, but Bitcoin is the dominant one.
Okay. And then let's flip and talk fixed income. Take a look at yields, 10-year, just up a couple basis points this morning. When it comes to the 10-year and yields in general, is the story all about the Fed next week? Is that really, kind of the trigger for any further direction?
For now, it is. And this is a pretty significant move we've made over the last couple of weeks when we just saw the 10-year trading back down around the 410, 415 area. Now we're up over 430. That's a significant move. And we're up over 430 as the eco data that's come in has been somewhat hot, but the probabilities of a rate cut next week have gone up nearly to 100%. So what that tells us is that in the short term here, yes, the short run yields, okay, they're moderating, but there is definitely a question mark as to inflation and where we're going in the future, which is why we're seeing that 10-year go up. Right here, the market is still accepting of 430, 435 range, but we've got to watch out for 450. If it gets up above 450, that could really pose some problems for the equity markets.
Yeah, I've heard that time again to watch that 450 level, and it just kind of proves the point about where inflation has been. It's not cooling as fast as we expected, and even when you look at the PPI print that we got this week, that was a little warmer than expected. So it's just kind of raising those cautionary flags. It seems like, though it doesn't take the expectation in terms of the Fed's path for next week. The concern is what happens in 2025. But Let's put a pin in our conversation for now, Scott. Thank you, Scott. Always great insight covering us from yields to oil and more. Scott Bauer, CEO of Prosper Trading Academy. Have a great rest of your Friday.